Hi, Mike and Jennifer Rigley here, bringing you another real estate update. Today, let's talk about potential turbulence in a real estate transaction. So, turbulence in a real estate transaction, what do we mean? Buying your home is like taking an airplane flight across the country. When you start on your trip, you have no idea how the trip will go. Neither does the pilot. You could run into 88 types of turbulence, or you could have a smooth flight and land on time. Certainly, the pilots will try to use their experience to navigate around the storms and go for the smoothest flight plan. But if they're honest, they can't promise a turbulent-free trip. Their job is to get you to your destination in the least time with the least aggravation while keeping you informed throughout the trip. There are at least 88 different types of turbulence we might run into in any transaction. This list is not all-encompassing, but it does catch some of the common issues. While some of the items are picky to some, they are very real and fearful to others. As your real estate consultants, we see ourselves as the pilot of your place. Our job is to find your home or good investment, negotiate and advocate for you, and to get you the keys within your time frame with the fewest aggravations. So let's talk about some of the most common causes of turbulence in any given transaction. So on the buyer's side, usually the greatest reasons are the loan, including the buyer not telling the truth or disclosing properly on the application, doesn't tell the truth on the loan application, has recent late payments on the credit report, finds out about additional debt after the loan application. A borrower or co-borrower loses their job. Their overtime income may not be allowed by the underwriter and they don't find out till it's too late. They make a large purchase right before a closing. That happens frequently. So don't buy anything if you're in a real estate transaction. Illness, injury, divorce, or other financial setback during the escrow. Other turbulence includes the buyer lacking motivation or the gift donor changing their mind. They can't find important documents like the divorce decree or their tax returns. They can't verify the rent. The interest rates increase and they can no longer afford the program. Loan programs change with higher rates and they get bumped out. Mortgage payment is double the previous housing payment. Frequently that's called sticker shock. Other buyer side problems is the borrower or co-borrower doesn't have steady 2-year employment history, or they change jobs or are on a probationary period, or one of them dies, or the buyer feels like the seller wasn't honest and misrepresented the house, or they come up short at closing. The buyer doesn't properly paper trail additional money that comes from gifts and loans. All that money has to be tracked, or they don't bring the money to close when it's time. On the seller side, the seller could lose motivation or not be able to find a replacement property. Some sellers are just difficult and won't allow the appraiser or the inspectors inside. Or they remove things like ceiling fans or chandeliers that were not agreed to in the contract. They get to the closing and they have liens that they can't clear or don't have enough cash to close. Or they probably didn't own the property. There was a co-borrower on there that they didn't disclose. They leave town without leaving anybody a power of attorney. They don't complete the repairs as they agreed to. They lose the home to foreclosure in the middle of the escrow, or they don't disclose properly. On the realtor side, it's pretty basic. If the realtor is doing their job, it shouldn't be an issue. But there are realtors that delay because they're too busy or don't make it a priority. They don't get the completed paperwork to the lender in time. They're inexperienced in the type of property transaction. They go MIA and go on vacation and just can't be found. Or their ego blows up the transaction. On the lender side, and this is usually where it comes from between the lender and the borrower, is the lender didn't properly pre-qualify the buyer. They didn't ask enough questions. They want too many repairs prior to closing. That happens frequently now. They want last-minute appraisals or second-guess the appraiser. They lose a form or they don't collect everything that is required up front. On the title and escrow company, rarely it is a title and escrow failure when we don't close, but it could be failure to notify the lender agents of unsigned or unreturned documents, failure to get the right liens, don't pass on valuable information in time. On the appraiser, many appraisers come from out of the area and don't understand the market. The appraiser doesn't come on in at value, or they take too long to get the appraisal done, or an appraisal comes in that's not on the approved list. When the inspectors we're hoping that our inspectors check their ego at the door. There are some inspectors that their job is to show everyone how smart they are and typically blow up the deal over minor issues. An inspector's job is just to be objective and show what he tells what he finds. So with those, we can't promise you no turbulence, but we can promise you that we'll utilize our experience and expertise to take you on the smoothest flight we can. If we do hit turbulence, we won't bail out on you. We'll be your teammate through the flight until we get you to safety to your destination, which is a closed escrow. Rest assured, your advocacy is our #1 goal, and that means you must be delighted with the product we provide and deliver beyond your expectations during the process. To start your home search, log on to www.wrigleyrealtygroup.com or call us today at 978-18